The Shirvan Speaks podcast is brought to you by FitzGerald Financial Group, a division of TowneBank Mortgage. NMLS number 512138. Shirvan Joseph, our host, is NMLS registered. NMLS number 188513. The contents of this podcast are for informational and educational purposes only. We are not financial advisors. Shirvan Joseph and FitzGerald Financial Group are equal housing lenders. This is not a commitment to lend. Enjoy.
Welcome to another episode of Shirvan Speaks. It's great to be back. This week we have with us our operations manager and loan officer extraordinaire, and ultimately the manager of 203K and construction, Jason Quigley.
Thanks, Shirvan.
Welcome, my friend.
Glad
Welcome.
to be here.
I'm glad to have you. It's been a long time coming. The market is hot with 203K deals.
Certainly is.
Everybody wants to know, and as we know, not everyone around the Beltway does 203K deals, particularly like us.
Sure.
So we have a good understanding of what 203K deals mean and what it means to the Beltway, particularly Washington, D.C., and all the areas that we cover in this area. So we'll get right to it.
Yeah.
Please start us off. What is 203K and what does the product mean to us?
So a 203K is just a regular old FHA loan, but really focuses on renovating a project.
Got it.
So you find your perfect house, but it might just need a little work, or you find a house that could be your perfect house, needs a lot of work.
Mm-hmm.
So our 203K comes in. It lets you do a little bit of work to like a facelift, just to refurbish a kitchen, maybe remodel a bathroom, or maybe you want to tear down a bunch of walls, you want to add an addition, you want to really remodel the house, and needs a lot of work.
Sure,
we can do that as well.
Got it. So from that standpoint, from all that you can do with a 203K, why is that the most advantageous route to take when refurbishing a home or uplifting a home or doing any repairs on a home?
I mean, the best part about it is you're not really out any of your money in your reserves. It's all built into the loan amount. So we're gonna look at the house you're purchasing, and let's just use a round number of $500,000. Let's say you find a house for $500,000. Maybe it needs $100,000 worth of work. Instead of you pulling out $100,000 of cash out of your bank account, we're gonna include it in your loan amount and say, okay, well, you're gonna put $100,000 of work into this house. It's gonna be worth at least $600,000 after the fact.
Sure.
So your loan amount will be based off that after improved value, we call it. So the $600,000, only putting 3.5% down because it's an FHA product. And then your loan amount's based off of that, and we help you manage the project all throughout the way.
Tell me what the difference is from the streamline 203K and the traditional.
So I'm glad you said it. So there are two types of 203K.
Sure.
So one we call the streamline, and then one's a standard 203K, and it really comes down to how much money you're spending in repairs. So a streamline, and this just changed in February. Streamline 203K lets you go up to $75,000 in total repair costs. There's a couple fees in there, like there's a contingency reserve based off of the work. So it's really about $66,000 in actual repairs. Anything over that $75,000 is a standard 203K. Now, there's really no delineation between the two. You can do the same repairs for both of them. But it's really that scope of work has to be under $75,000 to keep it a streamline. And the only other thing that's kind of a difference is once you go to a full 203K, so anything over that $75,000, we want you to work with a HUD consultant.
Gotcha.
So the HUD consultant is FHA approved. They know the ins and outs, not only the FHA 203K program, but they're also very knowledgeable in construction and renovations and repairs and costs and that kind of stuff. So with the standard 203K, you're going to work with that HUD consultant. They're going to help you identify the repairs. They're going to come up with a scope of work and how much those repairs should cost us in labor and materials. And then you're going to use that scope of work to identify a contractor, pick the contractor of your choice. And they're going to marry their bid for your project to that scope that the HUD consultant prepares, really making sure you're not getting taken advantage of. That's what it really comes down to. And the nice thing is, even with that smaller, that streamlined 203K, you can still choose to work with a HUD consultant. There's nothing that says you can't.
And I was about to ask that question.
And the last streamline 203K we did, the borrowers elected to have a HUD consultant because they hadn't worked on a project like that before. And it kind of helps them, like I said, it helps them manage the project. gives them somebody that's an impartial consultant to talk to. I mean, I know for me, I even if I was doing the streamline, I would want a HUD consultant just because I can install a doorknob in my house, but when it comes to breaking down walls, like I don't know what the contractor's doing. It's nice to have a consultant that go, well, maybe you don't need to do all this. We can do this instead.
Now, you were talking about the contractor. Do you still have to get the contractor approved?
So yeah, we do that in-house.
Okay.
So that, and here's the one stigma from the 2 or 3 days. There's so much extra work to do. There's really not. There's a couple extra pieces of paper.
Sure.
Yeah. One of those things is a consultant's information sheet from the contractor.
All right.
So they're going to fill it out with references. They're going to tell us, how many projects they've done, how long they've been in business.
Sure.
And then we're going to go through that. And we're going to call the references. We're going to check up on them. We're going to pull the permits and make sure that they're getting the permits. We're going to look at business licenses to make sure that they're in good standing. So we're going to make sure that you're being taken care of as well. Hopefully you've done your due diligence already.
Sure.
Picked the contractor, but we're going to make sure that contractor.
Good. With regards to the time frame, what's the turn time? Whether it's a streamline or whether it's a standard.
So streamlines that under $75,000, we're going to give you up to 9 months to complete the project.
Okay.
And then the standard, we're going to give you up to 12 months.
Got it.
And then one of the other things between those two, just going back to that last question, with a streamline 2 or 3K, because it is a smaller amount of work we're normally doing, we're going to disperse funds twice during the project. We're going to look at that scope of work. We're going to say, okay, we're going to give you 50% of the funds up front at closing, to get you started and get that seed money so you can buy supplies, they can start demolition, whatever get permits. So we're gonna give you 50% up front, and then there's gonna be a final inspection at the end. We're gonna give you the rest of the funds up at the end, and it's a two-party check. So the borrower gets a check to give to the contractor.
Got it.
And then for the full 2 or 3K, we can do up to 5 draws. So we're not gonna give any money at closing, but throughout that process, that HUD consultant's going to come out. They're going to do an inspection. They're going to look at the work to make sure everything's done to code. They're going to make sure everything's done to your standards. And then they're going to see how much has been done, and they're going to cut a check to the contractor for that amount of work during that inspection. And they'll do that up to 5 times throughout the project.
What's the close time that you think is the time that we should do?
Like a reasonable closing time is 30 days. 45 at the most, typically. A lot of it depends on, your borrower, the contractor.
How responsive they are.
We're getting documents back. Because the great part of this process is, let's say you take a contract today. It's gonna be a 2 or 3K loan.
Sure.
You're not handing that contract off to me. I'm not taking over your agent. I'm not taking over your borrower.
I'm glad you said that, so realtors know. Correct.
I'm here to help. I'm in the background. I'm here to help make sure everything's going smoothly. Review numbers, review paperwork. But you're the one that's still talking to your borrower. And if they have questions, I'm here to help answer them.
You could come into play, but you're really just on the sideline.
You've got a relationship with that borrower. You've got a relationship with that agent. I don't want to interrupt that. I'm here to help that. I'm here to take it to the next level if we can. But I wanted to make that clear too. That you're not getting some guy that you've never met before, you've never talked to before. That's just going to be taking over your loan application and your process. So throughout that process, you're going to take your application. The borrower is going to find the house. They're going to put a contract in. They're going to say, "Yep, that's going to be a 2 or 3K. We're going to have to do some renovation to it." I'll help get those numbers together.
Okay.
I'll help you get the paperwork together. You'll work with the borrower and the contractor with paperwork. And the whole time that we're doing this, your processor is still processing the loan, still doing all the normal stuff behind the scenes.
That happens normally on any loan.
Yeah. So even if the contractor is not super responsive right away, it's really slowing down all the other aspects. It's just slowing down that paperwork from the contractor that we need to review. So that's why I say 45 days. If we're not getting a very responsive contractor or borrower. But very rarely do I see it go that long. Typically, it's in our 30-day.
It's a 30-day close for the most part.
A lot of people think 2 or 3K is this great big project. I'm going to spend $200,000 renovating this house. It's great. We would love you to do that.
Sure.
But the house might not need that. The house might just need a new kitchen. Maybe it just needs a new bathroom. Maybe it just needs new cabinetry somewhere. We can do that too. It's got to be over $5,000 worth of work. To qualify for a 2 or 3K. But it can be a $30,000 project. It can be a $20,000 project. So it doesn't have to be just this full gut job and we're just tearing everything out and basically making a brand new home on the inside of the bones of the outside. It can be like, this is the perfect house for me. I just really want a new kitchen cabinet.
Got it.
I just want a new
Want to
kitchen
do
counter.
something,
Yeah.
right?
Want to finish the basement. That's a perfect excuse to do a 2-3K. You move in the house, everything is great, unfinished basement. Let us help you out with that.
That is so awesome, and it just solves a lot of problems for customers that really don't know where to turn. The home equity line that people try to go after when they could do it such a simple with a 203K, probably get a lot more money.
Yeah.
And do a project where everything is taken care of for them.
I think just from the simplicity aspect of everything with one lender, one loan, done at one time. I think that's the beauty of a 2 or 3K is you're not shopping around and have a loan with us, and then you got a home equity line someplace else that you have open forever, and you forget that it's there, and it's maybe hurting your credit.
Right.
I think the simplicity aspect of one-stop shop. We're going to manage this thing for you and make sure it gets done the way you want to get it done.
What does conventional have? Not necessarily to compete, but just from a standpoint as an option.
So as you know, with FHA, you've got to be your primary residence.
Right.
That's it. So that's the biggest difference is yes, conventional has a product. It's called a Fannie Mae home style loan.
Oh yeah.
Same thing, renovation loan. The biggest difference is it lets you do second homes and lets you do investment properties.
Right.
So that's the biggest draw of the Fannie Mae product. Similar structure where you have a HUD consultant. You've got draws through the process. Where if you can, and you can be a first-time home buyer with that one as well. It's 3% down for a first-time home buyer, 5% down if you're not a first-time home buyer with a conventional loan. But then, like I said, you can do a second home. You can do an investment property if you want to rehab an investment property. And it lets you do what some would call luxury items. Where FHA for a 2 or 3K, it's not going to let you put a swimming pool in your house.
Okay.
Fannie Mae will.
Right.
It's not going to let you put in an outdoor kitchen in your new house. Fannie Mae will.
Right.
So there are some things that you can do with the home style product that you're not going to do with FHA.
Now, when we say with the home style product, would the home style product go as high as the traditional 203K? Because the swimming pool sounds like it's pretty high.
You can do I think the number right now is 50% of the after improved value in construction costs. With the Fannie
awesome.
Mae.
Outstanding. And the same time frame as far as turn time with a Fannie Mae or Freddie Mac product?
Exactly. So 30 days, 45 days, for stretching it to get it done, 12 months for the work to be done. One of the differences with the Fannie Mae product and with FHA, like we talked about the streamline, you get a HUD consultant after $75,000.
Right.
With Fannie Mae, it's after $15,000. You get a HUD consultant. Because one of the other things is FHA, you can have a little lower credit score.
Sure.
FHA is a 640 credit score.
Yes.
Fannie Mae, the home style product is a 680.
Okay.
So
and I think that's critical that they know that because the FICO score plays a role in which product to select.
Yep. So you have that option. Also, the rate's going to be a little different. A conventional rate's going to be typically a little higher than your government FHA
usually
rate.
About a half a point higher.
If you've ever done an FHA loan, you can do a 2 or 3K.
2 or 3K.
I mean, all there is a couple more pieces of paper. The borrower signs, the contractor signs, and I'm helping you out with that. Anyway.
So from your standpoint, and I know you wear many hats. So we've got the Fannie Mae, Freddie Mac. Obviously, we have the 203K. Construction.
Yeah, sure.
Explain to me our construction, what our role is.
We've got a great construction product, and we partner with TowneBank, which is obviously our partner here, to help us manage that product. But yeah, I mean, anywhere we lend in our lending footprint, we can help you build an entire home.
Nice.
So let's say you already have a lot that was gifted to you, or you bought a lot and just want to build on it. We can build on that. If you identified a builder that's selling you the lot with your construction product, we'll help you out with that.
Wow.
It's again loan down payment options. So it's 89% is your LTV, so 11% down. It's 680 is our credit score for that.
And how many close?
It's a 2-time close. So while you're building your home, we're going to do a construction loan for you. And that's going to be just principal and interest on your draws as you're building that home.
Sure.
So once you finish the home, home's built, you've got your use and occupancy permit, we're then going to refi you out of that construction loan into whatever permanent financing that you qualify for. So whether it's a conventional loan or a veteran, you can do a VAN loan for that and qualify for that. So then you'll have your permanent financing that's going to take you for the next 15, 30 years,
Right.
whatever, whatever product that you choose. It's a fantastic product. It's tiered as far as how long we let you take, but say anything under $1 million, you've got 15 months from the time you close
Right.
to when the construction has to be done. We help you manage that. All the draws to the builder are done through us.
Right.
You log in as a consumer and you approve those draws. So let's say the builder requests a draw and you're like, nah, I'm not real sure that I'm happy with the work yet. You're the one that clicks the button and says, yeah, I approve that we're going to give that money to the builder.
That's good to know.
Then we step in and try to identify that and fix.
From a turn time standpoint on the construction?
Yeah, I would say similar to 2 or 3K.
Oh, okay.
Probably closer to 45 days than 30 days.
Right.
From start to finish, because that's a lot more. We're going to vet the builder. And I'm not doing that here.
Right.
TowneBank partners are doing that.
Sure.
They're looking at builder financials and statements and their history of constructing homes. So there's a little more back and forth with that. Plus you've got permits you're pulling for the county to build. So a lot of it depends on how prepared the borrower and the builder are, that they've already pulled permits, everything's ready to go. Because that process can take some time depending on your jurisdiction. The other nice thing with our construction loan too, like when we're talking about the 2 or 3K and the home style, those are great if you're just kind of going into an existing structure and revamping it.
Right.
We can take that. Say you found a house, but you want to tear it almost down to like just the studs. We can use our construction program to finish that product for you.
Oh, really?
So instead of, it wouldn't qualify 2 or 3K because you need to have walls up.
Right.
But let's say we're tearing everything down. We can turn that out of a renovation loan into our construction loan and manage it the same way as a construction loan would, 2-time close.
And that's applicable then to stuff in DC where you see a lot of these houses under rehab.
Sure.
Right.
Or let's say, you want to do a 2 or 3K. It's going to take you to a loan amount that isn't qualified in the area that you're in.
Right.
Well, a construction loan can take over for that.
Got you.
Glad you said DC because that reminded me. That's another great aspect of our 2 or 3K program. Let's say you're in DC and we just did one of these.
Right.
You find a home that's really great, but you're like, I could probably turn that into a 2-unit.
Sure.
Let's do it. You can take an existing 1-unit property
and turn it into a 2-unit.
Renovate it, turn it into a 2-unit, live in 1 unit.
Right.
And have your second unit as an investment property.
We're going to leave with this.
Yeah.
What is the ceiling as far as the amount you could lend or the amount a borrower could borrow on either construction or rehab?
So our construction loan, truly, when we go over $2 million and above.
Okay,
I mean,
nice.
There's really no limit.
Yeah, I just wanted to know the variance.
For a renovation loan, I'm trying to remember, but I want to say FHA is $806,000.
Yes.
Based on your area.
Right.
I mean, it can be a little lower based area.
Right.
But for a multi-unit property in DC, that goes like 1.2 million, 1.3 million, somewhere in there. To qualify still for an FHA loan. And again, home style, it's looking at your conventional conforming.
Right. So they just follow the loan limits and you're fine.
Yep.
Well, I hope this kind of woke you up to some opportunities, particularly realtors and buyers that have these projects or these customers they're a little fearful of getting involved with because they just don't know the program. Just give us a call. We have the 203K construction guru here that will lead us to exactly where you're trying to go. Jason,
thanks, Shirvan.
Appreciate you. Thank you so much for being here. And look, thanks for tuning in. We'll see you next time on Shirvan Speaks.